It's become an annual Las Vegas event as Western CPE gears up for the annual federal tax update season. Hi, I'm Paul Larson, CEO of Western CPE. Contrary to the famous slogan, "What happens in Vegas stays in Vegas," what happens with Western CPE in Las Vegas does not stay here. The last thing we want is for tax knowledge to stay here. Here in a relaxed setting at the Tropicana Las Vegas, 14 of our top instructors gather to discuss changes in tax law and the latest key cases from tax court.
But the Stewart case on the bottom of page number 60 is what about workers' compensation? This is a really interesting case because Stewart gets both regular retirement and a part of it was service-connected injuries. And the court allowed a bifurcation on it that says how much was connected to the service and how much was connected to your age or length of service. And they figured out that there were two parts. And so the part that was for the disability was not, of the 12,000, about 7,000 was connected to that, about 5,000 was connected to age. I don't know how they figured it out.
All income is taxable, whether it's legal or illegal income. The trick here is that what the courts have consistently applied is that if I'm in a trade or business, even if it's an illegal trade or business, I am allowed to deduct all my ordinary and necessary business expenses against my business income. The exception under federal law to that, however, is in the case of drug trafficking. So in the case of drug trafficking, I am not allowed to deduct my ordinary and necessary business expenses. I must report the income, cannot deduct the expenses, except, by the way, I am still allowed to deduct cost of goods sold.
This is just a fascinating case.
He gets married in 1991, and it was about the same time he became a free agent. And in 92, for whatever reason, he and his wife agreed to a post-nuptial agreement. Instead of a prenup, they did a post-nup. And in the post-nup, it said, if we get divorced, if there's some settlement from Major League Baseball, you can have it, whatever it is.
Well, in the meantime, LaPointe gets divorced. So in 2004, he gets the first of two settlement checks, $385,000.
His wife gets it.
The next year, he gets another $220,000 and signs it all over to the wife. Well, he takes a deduction for alimony, and she throws a fit. She didn't claim it as alimony, and they went in and looked at it, and there was no excluded death clause. So the judge rules it's not alimony because you'd have to pay it to her estate if she died. So she got about $700,000, and he had to pay the tax. And all this proves is there is crying in baseball.
That's right.
In the evening, at poolside, the discussion continues. California-based Ron Roberson asked William Murphy of Indianapolis about a key tax extender bill that is working its way through Congress.
The actual history of this bill was that, as we all have been watching as it comes through the committee system, the Senate finally passed at the end of August by a bipartisan vote a group of tax extenders that we think are really going to aid both ourselves and our clients in understanding what is going to happen for both 2012 and 2013. And with that extender bill, we're really hopeful that many of the items of uncertainty can be cleared up. One of the main pieces of uncertainty was whether the AMT patch was going to be extended. As you know, it essentially died or expired at the end of 2011, so we were all working in a bit of a vacuum for 2012-2013. Many CPAs have been struggling with the problem as they do extensions. What do we do about our estimates for 2012-2013? Will there be some bipartisan move in Congress to try and help us? This bill is a good indicator of probably what both the House and Senate leadership probably feel is something that's good for the country. The main emphasis that I saw in that bill was clearing up the AMT patch. It's going to cost $132 billion, but at least it's going to focus on helping us do some more planning for some of our clients.
And Bill, on that AMT patch, is that a one-year patch for just 2012 or a two-year patch?
No, which was very surprising, Ron. It was a two-year patch.
Great.
And this patch that was was put in place, was put in conjunction with a lot of other extender bills that had been sitting and languishing in Congress for a number of months. We all have been waiting and waiting to see what was going to be extended for not only 2012, but 2013. This AMT patch was the focal point of those 2-year extenders.
And then probably things like the sales tax deduction, those things probably also looking to be extending?
They did, and what was interesting about it is you go through the litany of extenders, some were extended for just 1 year, which gives us an indicator, I think, of looking at what their thought process probably was in trying to help us find our way out of the woods, essentially, to say 2012 is going to be a sure thing. 2013, still up for grabs.
Western CP presents Federal Tax Update and combined federal and California tax update seminars in 48 cities around the country. For the closest location to you, visit westerncp.com. In addition, we have special 16 and 8-hour tax update webcasts plus self-study courses. You can find these also at our website. Western CP is the premier provider of tax update instruction in the country.